everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning. You're watching DayBreak on Bloomberg Quint Live, and I'm Alex Matthew. First, let's look at the headlines this morning. Asian markets have opened on a negative note after tech stocks led a major sell-off on Wall Street. The RBI comes to the rescue of banks, allowing them to spread out mark-to-market losses on their bond portfolios over 4 quarters. And the battle for Essar Steel will now be fought by 3 entities. ArcelorMittal re-enters the fray along with 2 new bidders as lenders call for fresh bids. And Revenue Secretary Hasmukh Adia says that the government is confident of meeting the 3.5% fiscal deficit target for the current financial year. Let's turn to the US markets. And the stock market, in fact, there kicked off the second quarter with steep losses as trade worries persisted. The declines were led by tech stocks that pushed US equities to their worst start to the second quarter since the Great Depression. Here's Bloomberg's Abigail Doolittle with all the action from Wall Street.
The second quarter of 2018 started off on a bearish note with the 3 major averages in Monday's Wall Street session all dropping sharply. The Dow fell by about 1.9%. The S&P 500 finished down by about 2.2%. But it was the tech-heavy NASDAQ that really underperformed once again, falling by about 2.7%. So this represents a continuation of the bearish volatility that we have seen in 2018. Volatility that has put each of these major averages now in an official correction from their all-time highs and has each of the major averages down on the year. Now, from a macro standpoint, one of the pressures, of course, is the possibility of a trade war, plus concerns that big tech could be regulated. In fact, relative to Monday's Wall Street session, one of the triggers for the selling action appears to have been President Trump, a series of tweets attacking Amazon, renewing fears for investors that perhaps there will be regulation ahead of some of the big internet names and, again, tech companies, something that really seems to have investors spooked for some of these high valuation, high flying names of 2017. So some of that valuation and that high flying action coming out on this recent selling action, something that in fact led the S&P 500 below its 200-day moving average. From a technical perspective, that's considered to be bearish. And from a breadth perspective, all 11 of the S&P 500 sectors finished lower on the day. So again, lots of selling action. Something to make note of, though, very interesting, is the fact that when we go cross asset class, we did see a bit of a rally for bonds and the haven yen, but not in a huge way. So there's confirmation that, yes, the session was risk off from a stock perspective, but not a huge flight to safety. Even so, again, the S&P 500, the Dow, and the NASDAQ in Monday's Wall Street session and starting off the second quarter of 2018 did close in official correction territory from the all-time highs for each of those major averages. Something to keep in mind. In New York, Abigail Doolittle, Bloomberg News.
Well, the Asian markets have predictably opened lower, with the Nikkei in Japan losing over 1% in early trade. It's now just about 0.97% down. The Australian benchmark, which returns after a holiday, is also trading lower, and the Kospi was down about 0.5% last I checked. Turning to the Indian market now, Darshan Mehta and Agam Vakil are here as usual to set you up for the day's trade and also to tell you what's happening in the futures and options space. Darshan, not the best cues from the global equity markets.
It's not given the fact that what happened in the US. So Europe was shut yesterday, but Asia slightly weak, but the SGX Nifty has managed to recover from the lows of the day. Nevertheless, a gap down opening is something that we can anticipate in a trade today. So weak opening is something that we can see. The ADR is not the best of close, but ICICI predictably was down almost 8%, given how the Indian markets had reacted. Infosys, Dr. Reddy's and Vedanta were down anywhere between 0.5% to 1.5%. What did well was only Wipro, which managed to move up almost 1%. 0.5%, but Tata Motors and HDFC Bank managed to remain flat in trade. Now, a bad day for crude coming in yesterday. The crude was down almost 2.5% in trade overnight. It's managed to recover a little bit, but still it's gone below the $68 barrel per mark on the Brent side, and on the WTI it's broken below the $64 barrel per mark. Most of the base metals yesterday London was shut, so the LME prices are not updated, but look at what's happening with China currently. So copper is trading flat, zinc has managed to go in lower, aluminium has managed to rise close to 1%, while steel is down 1%. So clearly mixed cues coming in from the commodity pack in Europe. In China. Gold, silver, platinum, palladium, all of them are trading with losses today. Now, yesterday, despite the market moving up significantly, FIs were net sellers to the tune of 690 crores. DIs were net buyers to the tune of 413 crores. So that's what happened on the first day of the new fiscal. What managed to move up was the Nifty Bank, which actually was up 65 points, but this came on the back of heavy losses. So it managed to recover all the losses and end with a positive bias. The mid cap was up over 2%. The small cap was up almost 2% in trade. So strong traction was seen as far as the banking space as well as the broader markets are concerned. Nifty Pharma and Nifty Auto were the two sectors which managed to outperform in trade yesterday. Significant amount of buying. What the weakness, only where weakness was seen was the Nifty PSU Bank Index, which was down close to 1% in trade. The Wix also managed to move down since the market moved up over 100 points. So the Wix was down almost 2%. The Nifty was up almost 100 points. So it was basically some of the private sector banks like HDFC Bank and Kotak Bank, which saw a significant amount of buying at the cost of ICICI Bank and Axis Bank. Reliance and L&T were the other contributors. But Agam, what are the FNOQs indicating?
Well, Darshan, it was a good day of trade when we saw the Nifty move up and climb to 10,200, and that also means that we did see some longs building in. But in terms of open interest, we really didn't see too much of change. As you can see, the open interest was largely just about 0.3% in increase. But as far as the Nifty Bank's concerned, we're looking at a 12% increase in open interest, so longs were certainly building up there as well. Moving in, we did see the India Volatility Index cool off. It was down by as much as 2.6% at around 15.3, largely range bound. And the Nifty put call ratio rose to around 1.4. This is on account of the fact that we saw a 100-point gain in the Nifty as well. Well, we are looking at changes in open interest in around the 10,000 put. That's where we're seeing more writing. That's also the level where we have the most maximum open interest, and well, a little more activity coming along in the 10,300 call. It's giving you a large range, a broad range. But Hexaware, of course, will remain in focus, considering we saw the stock move up by as much as 10%. And we saw a substantial increase in open interest along with NID Technologies from the same space. Canfin Homes, on the other hand, took quite a hit and was down by as much as nearly 11%, and looking at fresh shorts. So these are some of the stocks that we can keep an eye on. But once again, all eyes will remain on the Nifty and whether or not it can hold on to 10,200 as we move into today's day of trade.
All right, Akam, thanks so much for that. Let's move on now. And the Reserve Bank of India has stepped in to provide relief to banks which have been weighed down by not just bad loans, but also rising bond yields. The regulator has allowed banks to spread out mark-to-market losses taken on their bond portfolios over a period of 4 quarters. The move comes as bond yields have risen sharply over the past 6 months on concerns of oversupply by the government. Just look at this chart. The yield on the 10-year benchmark moved from just under 6.5% at the start of September to a high of close to 7.8% at the start of March. From there, though, it has fallen to around 7.4%. And the recent down move came after the government announced its borrowing program for the first half of the financial year. Remember, it plans to borrow less than it did last year in the first half of the fiscal. Basically, it won't front-load its borrowing. Let's go to Saloni Dhanuka now, who has all the other updates in the bond and the rupee market. Saloni, big move, though, in the bond market expected.
Absolutely, Alex. So RBI, as you mentioned, has allowed the banks to spread out their M2M losses incurred due to adverse yield movement in December and March quarter over the next 4 quarters. Now, this move will provide some relief to banks amid the concerns which are going on. Now, in line with equity markets, money markets were too closed last week on Thursday and Friday on account of a local holiday. Separately, currency and bond markets were closed yesterday on the back of year-end settlement. Now, remember the domestic currency on Wednesday slipped 21 paise against the dollar to end at 65.21 level. Now, widening fiscal deficit due to lower than expected GST collections largely weighed on the rupee. Well, speaking of how the domestic unit performed in the first quarter of 2018, it has depreciated by a good 131 paise or 2.2% against the greenback. Elsewhere, India's foreign exchange reserves touched a record high last week. It rose nearly $1.2 billion to touch a record high mark of $422 billion. Elsewhere, traders will remain cautious ahead of the RBI policy meet this week. RBI is expected to stand pat on its policy. Elsewhere, on the global front, the dollar index is now trading steady near 90 levels. Elsewhere, euro is trading 0.2% lower against the dollar. And lastly, speaking of dollar rupee, it is trading at 65.13 levels against the dollar in the non-deliverable forward market, which indicates a flat to positive opening for Indian rupee in today's trade, Alex.
Thanks, Aloni. Well, we'll have to watch out for the monetary policy, and there will be a lot to talk about over the course of the day in the run-up to that. But for now, let's focus on the commodity space. Jayesh Kilnani is here with all the details there. Morning, Jayesh.
Morning, Alex. So let me start off with oil prices. So WTI, in fact, lost nearly 3% overnight. That was the biggest, second biggest fall of 2018 that it saw for itself. Now, fears of a trade war have made investors risk averse. Based on this, oil prices declined and gold prices, in fact, climbed. Also, for the oil market, what a Bloomberg forecast is expecting is that the crude oil inventory will likely rise as much as 2.4 million barrels for last week. As far as the precious metals are concerned, we saw an uptick in the gold futures, which actually nudged the 1350 mark. Now, trade war concerns have made investors risk averse, and demand for the safe haven is seen rising. On the back of this, gold gained most in over a week now, currently trading at nearly 1340 for an ounce. As far as base metals are concerned, on account of a holiday, we did not get any cues from the London Metal Exchange. However, if you look at the Shanghai Futures Exchange, most of the base metals have opened on a negative note, except for Shanghai Aluminium, which is trading higher by 1%.
All right, thanks so much for that, Jayesh. Let's move on now to an update in the insolvency space. In a fresh twist to the Essar Steel insolvency process, 2 new players have submitted their resolution plans after fresh bids were invited by the lenders. One of the 2 new players includes JSW Steel and New Metal, who have formed a joint venture for the purpose. Anil Agarwal's Vedanta Group has also thrown its hat into the ring. The third bidder is the ArcelorMittal Sumitomo JV that had participated in the earlier round of bidding as well. Revant Ruya's minority shareholding in New Metal was purchased by the other shareholders at the company, following which it signed a JV with JSW Steel to enter the bidding process. The matter is now scheduled for hearing tomorrow at the Ahmedabad bench of the NCLT. Meanwhile, Vedanta chairman Anil Agarwal has said that it was the right time to bid for Essar Steel and that Vedanta's bid will only help derive greater value for Essar Steel. Listen in.
No, but see, one was we have very good harmony among ourselves, whether it's Mr. Mittal or Mr. Ruya or Sajan Jindal. We all are in the same. And when one was the Essar was bidding for it, and we were looking for electro steel at that time. And then we find that the situation in a couple of months has changed. We are closing our balance sheet in the March, and we get excited. We put up this to our board. They're also very excited. We talk to our bankers, and it is everything has a time. So this was the right time. It has come at the right time, and we bid for it. It was not that before or now. At that time, we were looking electro steel to complete, and that was complete, and now this thing has come, so we come into this process. And I'm not saying I'm going to get this. whoever is the best bidder will get this asset. But because we have come in, the bank has done a fantastic job in this. Because of we have also come in, probably they will get a better price. And the way they have run the process, I really appreciate the way they run the process. It is, they have been very sharp, they have run the process well, and because we have come in and they created a good competition among everybody, so they will be best advantageous position to get a better price.
For a consolidated story on that update, though, you can check out the story on the website bloombergquint.com. Let's move on now. Finance Secretary Hasmukh Adia has said that although FY18 was a year of uncertainty in terms of revenue, the centre is confident of meeting the fiscal deficit target. Adia also stated that the direct tax collections have exceeded the revised target for the year and are expected to go up further.
Both in direct and indirect tax revenue, we have broadly met our target. And we are very much on course to achieve our fiscal deficit target. We are absolutely confident that we are meeting the fiscal deficit target of this year.
Well, remember the revised target for this year is last year, FY18 is 3.5%. The e-way bill system for transport of goods has been implemented yesterday, and 2.98 lakh traders have registered for e-way bills. So what exactly are these e-way bills and how do they work? Take a look at this special report.
Imagine a truck carrying 100 bales of cotton from Mumbai to Surat. Right now, it needs to carry the tax invoice or the delivery challan along with the goods. But come February, goods that need to be transported from one state to another will need to carry an e-way or an electronic way bill. Think of it as an online registration of who is supplying to whom, where and how much. Now here's what will happen when the e-way bill system is implemented. The supplier, receiver or transporter of the goods will be able to generate this document on the e-way bill website before the goods start moving. You could club several deliveries on the same transport, but each of those will need a separate e-way bill number. Change of transport mid-journey will also require a fresh e-way bill. And here's the information e-way bills will capture: goods and services tax identification number, place of delivery, invoice number, invoice date, nature of goods, value of goods, HSN code, etc. Anyone making a sale, transfer or exchange of goods exceeding 50,000 rupees for a distance of more than 10 kilometers will need to carry this bill along. It will be valid for 1 day for a distance of up to 100 kilometers, an additional day for every 100 kilometers or part of it after that. If the goods are not delivered within the validity period, a fresh bill will need to be generated.
All right, what are the stocks that you have to watch out for in trade on account of them being in the news? Well, Nikki Murchandani has a list to tell you about in the stocks in news. Nikki, what do you have for us?
Thank you, Alex, for that. To begin with, we have Motherson Sumi, which has inked a deal to acquire Radel Automotive Group for $201 million from Cerberus. In second in the list, we are tracking Tata Steel, which is going to be paying 35,200 crore for acquisition of Bhushan Steel and is expected to convert remaining debt to equity. Also in the list, we have VSC Tillers, which for the month of March has recorded a good 23% growth in its vehicle sales at a number of 7,399 units as compared to 6,023 units in the corresponding month of the previous year. It has also commissioned a new power tiller plant in Karnataka. Galaxy is the other one that we're tracking on our radar. It has got 13 observations for 2 of its facilities at Tarapur. Doubt the reaction of this development given the relatively small contribution in its overall revenue. RPP Infra yet again has received an order worth around 264 odd crore. In terms of bulk deals, we are expecting some sort of action coming in from Jayashree Tea, where the promoter Kesoram Industries has sold nearly 0.7% stake in the company for 86.56 per share. WPIL, it's a relatively small company with a market capitalization of less than 500 crore. There, the promoter has bought in 2% stake. Back to you guys.
Thanks, Nikki. On to the big brokerage calls of the day. Somit Sipkar has a couple to tell you about. Morning, Somit.
Good morning, Alex. On the big brokerage calls for the day, first we have is Motilal Oswal on Tata Chemicals. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 940, which suggests a potential upside of 36%. Now, according to the brokerage, Tata Chemicals will be focusing on consumer and specialty products. Now, the brokerage is expecting consumer and specialty products to contribute nearly 33% to the company's total revenue by financial year 2020. The company is also using its cash cow business of soda ash and sodium bicarbonate to build its specialty and consumer products business. And the company's existing salt distribution network will help its consumer business, says the brokerage. Also, the brokerage is expecting the company to be net debt free by financial year 2020, as it expects this reduction in debt to happen via sale of fertilizer business and investments. It is also expecting the company's revenue and net profit to grow at a compounded annual growth rate of 7% and of 9% and 22% over FY18 to FY20. Lastly, the brokerage also has a bull case target price of close to 1,147, where they are expecting higher sales growth and operating margins from the company. Second we have is HSBC on Hero MotoCorp. Now, they have raised the rating on the stock to buy from hold and have hiked the target price to 4,200 from 3,800. Now, according to the brokerage, recent correction in stock price warrants for a positive stance on the company. It also says that Hero will remain the key beneficiary of revival in rural market, as it has more than 50% exposure to the rural market. Also, Hero's operational parameters are among the best in the sector, according to the brokerage. The company has a robust free cash flow yield, strong cash reserves and solid return ratio, says the brokerage. Lastly, the stock looks currently cheap compared to other two-wheeler companies, and the risk reward is favorable, according to the brokerage.
Thanks, Amit. Moving on to some national news now. Dalit outfits called a nationwide strike yesterday against the alleged dilution of the SC/ST Prevention of Atrocities Act by the Supreme Court. The protests turned violent in several parts of the country, leaving as many as 9 dead and several injured. A curfew was imposed in at least 3 districts of Madhya Pradesh. And the CBSE has postponed class 12 and 10 examinations in Punjab that were scheduled to be held yesterday in view of the Bharat Bandh. Meanwhile, Madhya Pradesh, Uttar Pradesh and Punjab have requested aid from central forces. Union Home Minister Rajnath Singh has appealed for peace, and Law Minister Ravi Shankar Prasad has said that the government has filed a review petition in the matter.
अस्पृश्यता और कास्ट वायलेंस, इन दोनों को डील करने में, इस दोनों को खत्म करने में केंद्र और सारे स्टेट की गवर्नमेंट फेल गई है। ये ऑनरेबल एपेक्स कोर्ट को भी मालूम है। बावजूद उसके कुछ फर्जी एट्रोसिटी के मुकदमों के चलते एक जनरलाइज्ड ऐसा कमेंट करना कि दलित समाज के लोग एट्रोसिटी के कानून का ब्लैकमेल के लिए इस्तेमाल करता है, और इसके चलते सारे एसपीस को एक डायरेक्शन देना कि पहले आप प्राइमरी इन्वेस्टिगेशन करेंगे, उसके बाद ही गिरफ्तारी होगी। ये कहीं ना कहीं एट्रोसिटी के कानून जो स्पेशल लेजिस्लेशन है, उसके महत्व को करीब करीब घटा देने की, कम करने की बात है।
जो आंदोलन कर रहे थे, इनके आड़ में उनको बलि का बकरा ना बनाया जाए, ये भी मेरा शासन प्रशासन से ये कहना है। और यदि ऐसा किया गया तो हमारी पार्टी चुप नहीं बैठेगी, और फिर हमारी पार्टी इसको लेकर जबरदस्त आवाज उठाएगी।
सभी राजनीतिक दलों की नैतिक जिम्मेदारी बनती है कि ऐसे समय में सभी अपनी तरफ से प्रयत्न करें और सहयोग करें, ताकि किसी भी जातिगत तनाव अथवा सांप्रदायिक तनाव की स्थिति इस देश में पैदा न होने पाए।
बड़े आदर के साथ हम कहना चाहते हैं, उस निर्णय के निष्कर्ष से और उस निर्णय के तर्कों से हम असहमत हैं। तो सरकार की ओर से एक रिव्यू फाइल किया गया है। सरकार खुद भी पार्टी नहीं थी। हमारी पूरी कोशिश होगी कि इस रिव्यू पर विस्तार से चर्चा सुप्रीम कोर्ट में हो।
Well, undoubtedly lots to talk about with regard to news on the national space and also with regard to the markets. Also, the MPC meet starts tomorrow, so there's also monetary policy to speak about today. But first, you can look at a lot of stories on the website as of now. Here are just a couple of them. Auto component manufacturer Motherson Sumi has bought privately held Radel Automotive Group for $201 million, or about 1,300 crore, in a bid to continue to diversify its products and geographical spread. Paytm Mall has raised close to 2,900 crore rupees from SoftBank Investment Holdings and Alibaba.com Singapore e-commerce in a deal that values Paytm's online shopping venture at $2 billion. Well, I don't currently have a watch on, but for watch enthusiasts everywhere, there's nothing like Baselworld, which is one of the world's biggest watch and jewelry fairs. This year, Baselworld saw timepiece trends like hand-painted dials and the slimmest automatic watch. Here are the hottest timepieces from that event. Well, those watches looked gorgeous, but I'm going to have to get a coffee to compute some of those prices. While I do that, you can tune in to All You Need to Know, which is up next on Bloomberg Quint. Thanks so much for watching.